Hey everybody, welcome once again to Hard Money with Delta Harbour Assets. Darren Long is here, ready to educate you and expand your already robust portfolio with better things, mind you. You want to reach out anytime to Delta Harbour. That's Harbour with a U, deltaharbor.com. 1-888-335-8645 is how you reach out. So Darren, a lot of stuff to get through today. I know you have an article you want to talk about. We're going to talk about inflation, kind of carry over from a little bit from what we talked about last week. But first, we always have a look back, not too far back, just basically the week that was. How are things, pal?
Oh, they're great, John. We're thankful to be in the space we're in the position that we're at. And in terms of Delta's business this week, fantastic welcomes to all of our new clients. It was a fairly busy week, steady week, and a lot of Zoom meetings this week. A lot of people coming on board that are brand new, thanks to this radio station, in part, of course, because this listening base is growing week by week. So we want to thank everyone for tuning in, and certainly the questions that have come through have been very poignant questions, and people care about their money, John, and it's great to see, because far too often we've found that in the past, people in Canada are passive when it comes to their wealth.
Yeah.
The week that was, silver, gold both broke critical levels on the way up in their journey forward here. We're going to talk super cycle today, commodities super cycle, which is a very important aspect of remembering where we are and how to look at hard assets as a portfolio addition. And silver right now trading around 27.28, broke the $27 barrier, had it attempted 3 times prior to this over the last few weeks. And if it closes and holds $27 an ounce today, that will be a very, very clear sign of where we're leading next week into the higher 27 range. The next key resistance levels are around 27.50, 27.60. And so we'd like to see it cross that path and then have a fairly easy climb towards the $29, $30 level, which is what we expect to happen here. In gold, it also crossed a very important mental technical barrier, which was 1800. It did so on Thursday, and both silver and gold are cruising into higher territory. They did so on the heels of some news in the U.S. Fundamentally, we saw some changes to what we're going to discuss today in terms of the inflation expectations. We saw interest rates are going to continue to be low. We saw some information that pertained to weakness in the U.S. dollar. And of course, if you're watching the Canadian dollar this week, you saw that it strengthened against the U.S. dollar, which also is the same. If you're looking at the index itself, the dollar index weakened against the basket of currencies, and that has traditionally pushed gold and silver prices forward. In other words, weak U.S. dollar, stronger gold and silver prices.
Darren, it would appear that the U.S. is finally, I guess, coming to terms with the fact that inflation's a real thing. You've been talking inflation and its effects for a long time. But in the U.S. this week, they acknowledged it's the worst it's been in, get this, 15 years, I think you wrote. And I mean, how does this fit into the narrative of the commodity super cycle that you discussed a few weeks ago and we're going to carry on with today? How does it all work?
Well, it's an important aspect of it, John, because we've been discussing this topic of inflation as one of the 4 fundamental reasons we love gold and silver as hard assets. Now, in terms of hard assets as a base, some have already taken off in value. Real estate, for example, one that's already jumped way ahead and been way ahead, and in fact may in some cases be overvalued to some extent. We saw some news out of Toronto that month over month for March, that there was a drop, absolutely the first one in 12 months in overall real estate prices, a very small one, but nonetheless still buyers being a little bit more discerning about what they're spending and how many extra bids are being placed. So that's interesting news to follow. But on the heels of that, there's also this super cycle feeling. We talked about it 2 shows ago. We're at the beginning, not the end of a super cycle. And this super cycle is going to be enormous. It's going to include a lot of what we've seen in previous incarnations of this. The most recent one was from 2002 to 2011, where we saw the price of silver run from about $4 to about $50 an ounce. Gold went from around just below $300 to about 1900 and change per ounce. So both metals climbed tremendously. A ton of money was made. This is where the smart money went. And despite the fact that during part of that period from 2002 to 2008, stock markets were rallying. There was no real significant money printing other than the norm, and interest rates were rising. So this is the expectation we have right now, but there's a different set of variables at play with the amount of money that has been printed since 2011, well, really since 2008. And more recently, as Canadians listening to this show know, here at home, we've made a mess of our finances. The Liberal Party has absolutely completely annihilated our debt levels, and there is going to be heck to pay for that. We are going to see that play out in the form of higher inflation, because there is going to be more money chasing, in some respects, less goods and services, but in most respects, the same amount. And we don't see this coming out any other way. So inflation being one of the four fundamental reasons gold and silver go higher in price. This is an important report. Bloomberg stated early in the week that this was a 15-year high, and this is the inflation gauge, and the debate rages on. Of course, they're going to do everything they can to tuck it comfortably under the rug, as they do with data. And lo and behold, for I don't know how many years now, a decade more, the feds in the US have constantly been denying that inflation is a problem. Yet if you go and spend money at the local grocers, you go and spend money on clothing, you go and spend money on vehicles and gas and all the things that we use day to day. Yeah, absolutely. It's crazy. You can't get around the notion that you're paying more for those things. Now, in the more recent days, and we'll talk about the Canadian equivalent here in a moment with an article we brought, there is tremendous concern on this side of the border that inflation is going to be a huge concern now, and we're seeing the data to support that. So while they're saying that, yes, there's a 15-year high in the inflation gauge in the U.S., at street level, John, inflation is raging at the 5, 6, and in some states as high as 7, 8%.
Man, oh man.
And if they admit it, they have to pay more money, cost of living adjustments. So they sweep it under the rug. And that's what happens and will happen here in Canada as well. This lack of acknowledgement that inflation is actually robbing us of our wealth, that it's taking purchasing power out of our ability to survive. And we're feeling the ill effects of that right now.
We're talking about hard assets here, everyone. If you're not schooled on hard assets, it's one way to get educated. It should be part of your portfolio. It doesn't have to be all of it, but it should be a reasonable chunk of your portfolio moving forward. Reach out to Darren and his team anytime to get educated. 1-888-335-8645 and deltaharbor.com. Online, you can contact there as well. That's Delta Harbor with a U, because it is all about you and getting your portfolio bolstered to the best of your ability with some hard assets. You mentioned the article. I want to focus on that, Darren, but we'll take a short break here and get right back to it after the break. We'll continue. This is Hard Money on Sauga 960. Hey, welcome back to Hard Money, Sauga 960. Good to have you along, taking the journey with us and educating yourself about hard assets and how to increase and improve your already lovely looking portfolio with some hard assets in the form of gold and silver primarily. You want to reach out to Darren at Delta Harbour, simple deltaharbor.com. That's Harbor with a U, and 1-888-335-8645 anytime. We left off, Darren, the last segment. Want to get into this one right away. Talking about an article from Better Dwelling. What was that all about?
Well, the article came out this week. It's from Better Dwelling. It's a website we follow. It's a very, very well put together website, and the article is entitled, "If You're Not Worried About Inflation Burning You, You're Not Paying Attention." And this is on the heels of data that came out from BMO this week. And essentially, the core of this is the support of the notion that not only stateside have we now witnessed the highest amount of what is being acknowledged as the normal inflation levels, the highest level in 15 years. It's also happening here in Canada. They point to the recent numbers of the Canadian commodity index. And of course, we were talking about the super cycle before the break.
Mhm.
This super cycle is at the very front end. It's in its infancy stages, but some commodities have already started to move, some of which are hard assets. We have seen gold and silver make tremendous gains since last year, but at the very front end of a cycle, this is often the case. There are many more years to go. But this article pointed out that there was a warning from BMO, essentially, that inflation is worse than what people would acknowledge. And that has a lot to do, John, with the fact that official inflation numbers get swept under the rug because we measure inflation incorrectly, in my honest opinion. Many economists will agree with me. And this is why we have hard assets. This is why we expect there to be super cycles that occur, because we take the printing of money and we combine that with the rising cost of goods and services, and it creates a huge perfect storm. And we're seeing the effects of that now. When we start to see banks acknowledge that, no longer is the same old rhetoric being spewed out at all levels that inflation isn't a problem, that in fact maybe we should even look out for deflation. It's not the case. Inflation is here. We're paying more for most of our day-to-day living expenses. Some of that is attributable to COVID and the reality that we're dealing with in the pandemic we're faced and challenged by every day. But this Canadian commodity index has risen 24% in the first 4 months of this year. And the index is now at its highest level since 2014. And what it basically is just a measurement of commodities. And it's a basket of commodities that are important to take note of, because they give us a gauge of where we can expect inflation to go. Now, one says, inflation, okay, so what? What does that mean to us, Darren? What does that mean as a listener, as somebody who has wealth or wants to protect wealth? Well, what it means essentially is that your purchasing power is going to decrease. So think of it as a dollar. 4 months ago, your dollar bought 24% more than it did. Wow. And that in and of itself is a harsh reality. Again, we're not always buying commodities to survive. We don't buy copper and metals and things of that just to survive, but it's in everything that we touch, the houses that we live in. We've just more recently, John, we talked about last week with Maurizio Londonio and a little bit about the super cycle on the show before that, and the week before, about lumber prices. And again, lots of articles this week spewing out data on building prices. And we know now that there's a ton of support for this notion that we are going to see this continue, that in fact, until the housing markets are quelled or calmed down a little bit, until the bidding stops and this craziness stops, that we're going to continue to see higher and higher prices. So going into next year and already over the last 12 months, we're seeing about a 30% increase in the overall cost of renovation. So for a basement that you were going to build, last year, that was, going to cost you somewhere around 50,000, let's say, it's going to be 15,000 more this year, 65,000. And that is a huge problem, because that is going to inevitably also have a role to play in our wealth. Our wealth will not go as far. We cannot look to the traditional classes as the only way to protect our wealth. We can't just continue to buy stocks or bonds or have money sitting in the bank. Savings, we're being punished for having them. So when we look at all this data, we put it together. Inflation is one of the key fundamental ingredients of understanding why gold and silver prices go higher. And historically, if we look back to the 1970s, the last major bull market in precious metals, what happened? Rates of inflation, interest rates all went higher. Bank savings rates were 10, 12%. Mortgage rates were 20 plus percent. And the price of silver and gold rallied to their highest levels ever. And in that all happened in the span of less than 10 years. Again, we're on the front end of a super cycle. And when you see Better Dwelling and other great websites writing about this information, it's a huge concern. And that has to be something that we take into consideration. Are wages rising? This article says there are sectors in which we are seeing hourly wages rise somewhat, but on the whole, career positions are not growing. The pandemic has wiped out office work. It's not a growth opportunity for most businesses. Thousands of small businesses have shuttered their businesses completely. And so we're here left to pick up the pieces. We have to support the notion that our wealth is the most important focus of what our journey forward is. Our expectation and our standard of living all have to come from that money we work hard and then in turn turn around and invest. You have to have quality assets like silver and gold in your portfolio to help do this right now.
Yeah, it's interesting you say that too, because getting your portfolio up to snuff with hard assets like you offer. I mean, this is the first. There's nobody probably alive. Well, if they're alive, there'd be about 104 who would remember last time there was such a cataclysmic event like a worldwide pandemic, and they weren't investing back then, and it was a completely different planet. So it's a bit of a science experiment. So I think to your point, why wouldn't you reach out and maybe do something you haven't done before with physical gold and silver and try that in your portfolio? It can't harm. In fact, it could help immensely, right?
Well, it could. And I think that's the one thing that we have to keep in mind. We are definitely going to see this continue. This path is going to develop. We're going to talk more about it in terms of where we are in the cycle in the show later in the show. And ultimately, I think that the challenge, do we make the most of this opportunity? Yeah. Well, one is we can't be passive. We have to look for ways to bulk up our wealth. We have to take risk. If we want to get ahead, we have to take risk. There's no two ways about it. It's not enough looking at the way things are developing right now to say we're going to have a comfortable living and a comfortable income from our investments. The wealthy are going to get wealthier. The divide is going to widen further. We have to do and have aspects of our portfolio devoted to things that are going to make us money, ensure our wealth, and gold and silver among the primary ways I can think of in terms of adding another level of income to that portfolio. So I encourage it 100%. And those listening to Sauga right now, this is an easy thing to do if you're working with somebody like Delta Harbour Assets.
Yeah, and a reminder, it's not just, I mean, there's the option, of course, just going and picking up some physical metal from you and using it that way or storing it with you. But this is also something you could dump into registered accounts like TFSAs and RIFs and LIRs and stuff like that. So this may be something that people are already kind of familiar with anyway. So that might be the avenue they want to take. But yeah, it's all about reaching out. And as we get into a break here, lots more to cover, but I want to give you some details how to reach out to Darren and his team. Simple. It is deltaharbor.com, Harbor with a U, of course, deltaharbor.com, and 1-888-335-8645. This is Hard Money right here on Sauga 960. Hey, welcome back. Hard Money. This is Sauga 960. Good to have you along for the show. DeltaHarbor.com. That's Harbor with a U, because this investing, this hard asset is all about you. Not familiar with it? Don't have any of these hard assets in your portfolio? Get some. Do the research. Get educated. 1-888-335-8645. Get a hold of Darren and his team. So we can't get through an entire show without talking about one of your famous metals, or favorite metals rather, Darren, and that would be our good friend silver. What do you got for me this week?
Well, listen, we've been talking about the super cycle, and we've talked about how commodities, lumber, copper, oil, food items, things, textile, wheat, corn, certainly real estate and collectibles to some extent have all started to rise in value. Some of them marking all-time highs. There are some areas that are going into brand new areas never been before.
Sure.
Palladium. Another example of a precious metal that's just reached another all-time high up in the $3,000 range. It's crazy, but it's happening. And of course, when we look at it, we want to give the clients and the people listening on Sauga the opportunity of a lifetime. And that for me is being presented in the metal that is both my favorite metal as well as a famous metal. Yep. And it's famous for its lack of celebrity. That's what it's famous for, because it has been talked negatively about for decades. It has had little fanfare in comparison to its bigger brother gold. It's silver, and silver for me represents one of, if not the most underrated and undervalued hard assets that you can own as an investor. That's liquid, transportable, easily stored, and can be part of your investment, both from a direct delivery standpoint. You can store it and be able to put it inside a registered account. Those are the basis of what we are looking for in every investment that we make. And it's a juxtaposition, because it's not paper. It's not a third-party promise. It's got a finite ending. There is only so much of it in the earth. So despite the fact that we may be in super cycle right now, and maybe 10 years from now, we're not in a super cycle, gone are the days of low priced silver. There are no more stockpiles existing anywhere in the world, and there have not been for more than a decade now. There is nothing that is easy to come by when it comes to silver supply. It is being made, pulled out of the ground, taken to the fabricator, produced coin form, and sent immediately out to the public. And that's been happening now for almost a decade. And we've been on the good side of that market as we've watched silver grow from this little unknown metal that basically some gold investors would think about owning, to a metal now that's standing on its own, which has its own merits, which, along with the other commodities, is going to be part of this super cycle. And I can't emphasize enough how, if we look at history and history repeats itself and we draw conclusions from that, if you were investing in silver or gold in the 1970s, you already know this. If you weren't, silver was valued at $2.50 an ounce in 1970. By January of 1980, it had risen in value to $52 an ounce. That's thousands of percent higher. And most of that gain came in the last 5 years, with a huge chunk of it in the final 90 days of that blow off top market. This super cycle could last 10 years. And imagine taking 5, 10, 20, 50, 100,000 of your money that you can devote towards this because you've done your due diligence in a registered account, in a TFSA, for the kids, for your family, and putting it towards such an undervalued asset. Well, for me, that has the hallmarks of being everything that we look for in an investment. And no, the banks won't talk about it. And no, your planner and your advisor, they won't talk about it. Very few do, but that's because it's misunderstood. They don't understand it. They're not comfortable holding it. They don't know how to store it. They don't understand the liquidity of the market. Mm-hmm. Gold and silver are the most liquid assets in the entire world. And given the circumstances that we find ourselves in, both here with inflation, as we noted earlier in the show, and across down in the US, the money printing, the amount of financial uncertainty that lies ahead. We don't know where this big boat is going to float to, but we know it has no motor. And we're just hoping we float to an island that's safe, but we have no idea whether that's going to be the case. So we have to protect our wealth. And if you're a planner and advisor hearing the show now, call us. We'll talk to you about that and help plug your clients into this and let you be the leader, make you an expert. But if you are somebody that wants to invest in gold and silver, like we said, right now, as far as price is concerned, for me, in my opinion, it represents a low risk entry point. It's still relatively low priced in comparison to where its other metals are and other commodities. At $27 an ounce, it's a low entry point. It's a finite resource. It's very transportable, and it's liquid. You can buy and sell by phone, put it into storage, take it home with you, bring it back, we'll cut you a check. It's liquid 100%. There's no issues there, never has been. And it's physical. It's a physical asset. You can buy it in bar and coin or a combination of both. Add to it some gold if you'd like and want to own both commodities. But either way, let's get this into your portfolio. Let's start making money instead of worrying about where our next pay is going to come from in terms of our wealth or building our portfolio.
Again, reaching out, deltaharbor.com, and 1-888-335-8645 is the best way to get started. You know, it's funny how you mentioned it's there. It's hidden in plain sight, really, silver, because it is everywhere. Like you talk about, it's in this microphone I'm talking through. It's on the lenses of my glasses. It's in your cars. Never mind electric cars. It's in every battery and piece of car there is, and that's not going to change anytime soon. So if it's such a commodity, a useful metal, why would you not want to get some of this in your portfolio in the hard asset form and hang on to it and let it grow?
It's cheap. I mean, where else can I go and buy something that is averaging 10 to 12% per year since 2006? I look back only because I happened to look at it yesterday. And if we look back further to 2002, where we started in this business, it's even greater than that. It's probably closer to 12, 14%. It's had 4 major rallies. It's produced a ton of return for investors. It's manageable. It means it can be self-directed. If you're the type of person who wants to take it home, take it home. just secure it safely.
Mhm.
And if you want to store it, we can help you with that. You can open up an account and you can buy it directly, and you can take delivery of it. You can also put it in your registered account. As you said earlier, John, it's an important reminder that we don't talk about often enough, because this is essentially one way that we can really benefit from taking advantage of what is afforded us in our RSP, in our TFSA, with respect to capital gains taxes not being there.
You bet.
Own a big hunk of silver or multiple. You can put it in there and use it as a way to make money and to protect your wealth. I mean, that's what I use silver for. And it, from time to time, like we're seeing now, and we will see in the near future, it's going to rally. And when it does, it'll rally hard. Except for this time, John, unlike other times in the past, this rally could take us to $100+ an ounce. And nobody in our industry is going to blink an eye. They're expecting it. They're preparing for it. Everybody's trying to find more of it. And the mines are trying to create more product every day, especially post-COVID era. We're trying to get to a point at which we can find more geography, but there simply isn't. It's a finite resource. And I would love for the listeners of this show on Sauga 960 to take advantage of it, because this is an easy thing to do, and you can do it directly through Delta Harbour Assets.
DeltaHarbor.com is a way to reach out. DeltaHarbor.com, Harbor with the U, and that number, write it down, keep it, phone Darren, talk to one of his team or Darren himself, at least get educated, something that might pique your interest about having this hard asset in your portfolio. 1-888-335-8645. We'll take a short break. Lots more to go. This is Hard Money on Sauga 960. All right, welcome back. Thanks for sticking around here. Sauga 960 and Hard Money. You want to reach out anytime to Darren and his crew, do it. Have a conversation. If this is something you have not got in your current investment portfolio and it has piqued your interest, or in fact, you want to move forward with it, it's really simple. DeltaHarbor.com. That's Harbor with a U. And 1-888-335-8645. Write that number down. Keep it. Use it. Have a conversation. Get educated, which we are going to do right now. Darren, want to first move into the different types of accounts. We kind of danced around it a bit in the last segment. We want to drill down a little more on that different type of accounts that you guys offer at Delta Harbor. So take it away, pal.
Well, the good thing is that despite anything I'm saying today, you don't have to write it down. You don't have to be remembering everything. That website, deltaharbor.com, has a comparison of all of our accounts there that's readily available to download in PDF format, which tells you about all the pros and cons of each account. But essentially, we kind of keep it in a nutshell to keep it simple, John. We have the option for clients to buy and take delivery. We call it a direct delivery account. Essentially, you want to own, say, some silver or gold. You buy it, and in the bar or coin form, after setting up an account, you fund your account, and then you make a purchase with one of the brokers here at the firm, myself directly, Robert, Roy, any of the partners. We're happy to work with everyone. We certainly don't have any bias towards big or small, short or tall. And once you've done that, you can take delivery of your product, which means you can pick it up curbside while we're in COVID, or we can deliver it to you, and it's free delivery over $1,000. So that makes it very simple for you to take home this product anywhere you're hearing this podcast in the world. We've had no problem moving product globally. We do it all the time, but more specifically for our Sauga listeners here in the GTA and the greater GTA, we can get it to you, and it's a personal thing. We like to hand deliver product. It's a very thing that makes us what we are, the Delta difference, so to speak, which we'll talk about later. That's a direct account. And if storing at home is not for you, we offer storage, a vault in your name at a vaulting facility also in Mississauga. And it is easy to do. It's a Class 3 vaulting facility, which means it has and comes with all the bells and whistles you'd expect in terms of insurance, in terms of integrity, in terms of being able to see your product. Of course, you can set up appointment outside of COVID. Otherwise, we will accompany you to the vault so that you can see, hold, touch, feel your product. And if you want to have a storage account, it's pretty straightforward. Again, we can use the account opening process, send you the paperwork for that. And really, it's just well, you heard our Google there. That's part of taping. It's the way it is. But that being said, you can also just simply open up a storage account and keep it in your name. And if you're one of the people that like to have inventory reports, we provide those as well. So awesome. Storing your gold and silver, very easy to do. And John, as you alluded to earlier, the third type of account that we discuss is the Registered accounts, putting bullion in your TFSA, RSP. What a brilliant idea. You have the room, maximize it. There's not too many financial planners, advisors out there right now that wouldn't automatically tell you and
That's
be
right.
preaching. Fill the TFSA, fill it up,
Yep.
use it up. It's capital gains free investing. It should be part of your portfolio. But the option to put gold or silver in there in physical bars or coins is also available to you. We can do that through Delta Harbour, and that's easy. We can talk about that. You can look at our comparison chart and see how that's done. And then lastly, but certainly not least, this is one of our most favorite accounts and one that gets used very frequently. Last week, we had Maurizio Londonio, the CEO of Precious Echelon, to talk about bulk bullion.
Yeah.
And bulk bullion essentially is just another option for people who don't want to take delivery of their product. They don't have a need to put it in their home, have uncertainty. They don't care whether they own bars or coins. They just want physical precious metals. And that means that they'll be able to have physical precious metals. They'll be able to trade in 1 ounce increments, and they will be able to buy both gold and silver. And the beautiful thing about bulk bullion is that because you don't have to care about a specific bar type, you're not telling us I want a specific 10-ounce bar. It means you don't pay those premiums for those 10-ounce bars, which right now through this pandemic has been a burden for investors. Those premiums have been very high for small bars. We talked about it last week. And if you can lessen the amount of money you have to lay out, it means you get more product up front. So that bulk bullion account does that, gives you the option to buy those accounts, have gold and silver, and then, of course, have the extended option of the collateral financing facilities that you can use your bullion as collateral for. In other words, you buy 1,000 ounces of silver, then of course it makes it very easy. You could get up to, let's say, for example, another 1,000 ounces that's financed and used towards your greater goal of making a return. And we can show you how to do that, walk you through it, and be on your side every step of the way.
Again, 1-888-335-8645, deltaharbor.com. Well, right at the end there, you mentioned where I want to go, Darren. 1,000 ounces, that's a nice round number. So using that as our base, take us through it with that number, how it all works and how it would look.
Well, it's a good example, John, because it's a common example. Now, we've laid the groundwork through this show for silver being an undervalued asset. Mm-hmm. So if you're listening and you're thinking, okay, well, I want to look into that, let's talk about it. 1,000 ounces of silver can come in 1 ounce bars. It could come in 10-ounce bars. It could come in 100-ounce bars, or it could come in 1,000-ounce bar. Now we're talking. And the 1,000-ounce bars are very interesting. We see them quite frequently in our line of business, but it's not something that the public gets too frequently. But in the bulk bullion accounts, you can hold 1,000-ounce bars. That's a possibility, and that's afforded to our clients that opportunity to do so. But if you're looking at 1,000 ounces, let's break it down in 3 different ways. It's a common investment here at Delta Harbour Assets, and 1,000 ounces, let's just say right now, if I wanted to buy 10 100-ounce Royal Canadian Mint silver bars, in my opinion, the best bars in the world, with a purity of 4 nines. So this is as pure as silver can come. Those 4 bars are going to cost you round about $39,000 Canadian right now. Mm-hmm. And that's the 1,000 ounces all in. And then, of course, you make the decision to take it home with you or to store it with us. And that is for 10 100-ounce Royal Canadian Mint silver bars. And if you're looking at it from a returns perspective, if you want to double your money and you're looking at the US dollar price of silver, basically it has to go from 27 to 54. To double your money. Yep. Pretty simple, straightforward. Now, let's take a look at the registered accounts. Same cost, roughly 39,000 Canadian will again get you the 10 100-ounce bars of silver. Put it in a TFSA, put it in an RSP, a lira. And if you already have those accounts open, you can use the money from those accounts to move over to Delta, bring it with you from another institution. And that way you're not out of pocket. You're just re-spending the funds you've already accumulated, re-diverting the funds that you've already spent. The bulk bullion option for 1,000 ounces, a little bit different. It's less expensive. In the bar form, if you're taking 10 100-ounce bars, roughly 39,000. But
Oh,
because you're not buying 100-ounce bars, you're just buying into the bulk bullion program. You have physical product. You can convert at any time and pay the difference of those premiums and take delivery. But assuming you don't want to pay those fees, and why bother if you don't have to, and you just
that's
want
right.
physical silver
Mhm.
and you don't care if it's in bar or coin form, the cost for 1,000 ounces is in fact about 2,500 less. It's about
Wow.
36,500. That means that that's $2,500 additional spending power you have, which means you get more than 1,000 ounces. And if you want to take that a step further and use your 1,000 ounces as collateral, or just have a collaterally financed
Right.
1,000-ounce count, well, you can do that very easily. It costs about 9,500 Canadian to do the account for 1,000 ounces, or you can double that and get twice as many ounces, or triple it and get 3 times as many ounces. So spending that same 39,000, instead you're going to get almost 3,000 ounces of silver, and that means your earning power is 3 times as much. So 3 very distinct options. We are easily able to talk about those with clients and hold their hand and walk them through that. And we can do that anytime, John.
Let's take a short break. I want to recap what we've talked about so far, go over some broad strokes as well, Darren. In the meantime, reaching out, if this hasn't convinced you, at least get more educated, better educated on physical assets. It should. Here's how you do it: 1-888-335-8645. That would be the number, of course. And deltaharbor.com, harbor with you, deltaharbor.com. We'll continue with hard money. This is Sauga 960. Welcome back. This is Hard Money. Darren, still a few minutes to go here. I'll give you some details how to reach out to Darren and the team, get educated. We went through a whole bunch of different ways you can get into this precious metal, physical metal market. And you want more details, deltaharbor.com. That's harbor with a U, and 1-888-335-8645. Okay, let's recap a little bit, pal. Where do you want to take us?
Well, listen, we started today's show with the acknowledgement that both in the Canada, we now have an inflation story developing,
Yep.
and we expected it. You can't get away with the type of money printing and loose financial policies that both the US and Canada have had for the last 10, 15 years without this story developing. Although, John, seems like we've been talking about this for a decade plus. We know the cost of goods at the street level is much higher. We brought up that Better Dwelling article, which we'll put in our newsletter this week, which is a key component of how we communicate at Delta. We're going to talk about that Delta difference in a minute, but we want people to know, if you're listening to the show, there is no obligation. Nobody here is ever going to twist an arm for you to get into this market or waste time, in more importantly, your time in trying to twist your arm to get into this market. You either like the story, you understand it, and you want to be part of it because you're a fan or because you see what we see in the developing story, or you don't, and that's okay. We part as friends. That's what we like to say here at Delta. But ultimately, we talked about that Better Dwelling article, noting that in the first 4 months of 2021, we've now seen the Canadian commodity index rise 24%. That's telling us that goods that we typically have for all of our day-to-day things that we use day-to-day are going higher in price. And we did that on the heels of discussing what is now arguably in the commodity space the cheapest of all of them, which is silver. It remains completely undervalued. It's almost as if everybody just shakes their head at this metal and says, leave it where it is. And for us that are in the industry, that means more for us. And I love it because my clients get more. We develop this story more. And I would have never thought in all my days of being part of this market that I'd have as much time as we've had to discuss this story, to tell people about what is happening, to awaken people, to say, hey, listen, you've got traditional assets. We're not knocking them. Stay on that path. Use the minds that you've become used to, the people you trust, the planners, advisors, the bank people that you trust, but also expand the idea or the notion that there are other assets you can own, physical, tangible assets that are great for so many reasons, insurance, for wealth building, for the what if scenarios, that some people in extreme situations believe our country might endure in the next decade. But as far as metal prices are related to hard assets and other commodities, copper, all-time highs approaching, lead, nickel, zinc, tin, iron ore, platinum, palladium, rhodium, There's so many that have already started this super cycle ahead of silver in terms of food items, corn, soybeans, wheat. We talked about this week, coffee, sugar. These are all adding to this equation of inflation, John. And as we said earlier in the show, four fundamentals or the reasons and pillars behind why we invest in gold and silver: depreciating currencies,
Right.
inflation or the threat of inflation, geopolitical instability, and supply and demand. And right now, inflation is the key ingredient, acknowledged on both the US as well as the Canadian side. And we'll put those articles in our newsletter that I want everyone listening to have. It is absolutely free, no obligation, but be on it. Get on that list, even if it's just to connect with us through the website, because sharing this with somebody means that somebody else is getting exposed to this story that's not often being told enough, that offers protection, wealth growth, and a reasonably undervalued commodity or hard asset that you as an investor can own.
Again, deltaharbor.com, harbor with you, to take advantage of that news article, that newsletter. Keep on at deltaharbor.com, 1-888-335-8645. Okay, you hear it in the ads all the time. The Delta difference is not just a catchphrase. There's actually got some Darren, tell me about it.
There is a little bit of meat on that, John. And having been in the industry as long as I have, I recognize that most people have come to realize in some way, shape, or form that when they're dealing with a service related company like Delta Harbour, where there's a product involved and a service, they are going to get quality, service, and price, but they're never going to get all three. So right off the bat, when we put Delta in play, develop the mission, develop the idea of what we could bring to the marketplace, it was that we didn't want a bunch of type A personalities running a business. We wanted people who can relate, people who buy what they talk about. So that's us. The guys here, the partners, the partnership that we share here is one that participates on a regular basis in the markets we discuss. And we wanted to be relatable. So we thought best way to be relatable is to make sure that every single client, big, short, tall, small investor, large investor alike, gets our time, gets our uninterrupted time. And that is part of that Delta difference. We're going to sit on the phone. We're going to take the time. And quite often in other companies and businesses, an owner would criticize his people for spending the amount of time on the phone that we do with clients. But this is an understanding thing. We want clients to be experts, their own experts, to self-direct their own wealth, to really get a grasp on what it is they're doing when they add these hard assets to their portfolio. And we want to have fun. We want to make money. That's at the end of the day what's at the very root of why we invest and protect ourselves. Not only do we want to ensure ourselves our wealth, but we want to make money. And ultimately, we've had a good run in some of these other traditional categories, but part of that Delta difference is digging out those opportunities. Listen, I might not be buying real estate today or a residential home because that is high, but that doesn't mean I can't own land or other types of income building real estate assets. I might not want to buy all precious metals. Palladium is priced very high, but in comparison to where silver is in this super cycle, I am looking at silver and saying, hey, this is a reasonable investment to make based on the fact that it's undervalued, based on the fact that it has great fundamentals. That's part of the Delta difference. Digging in deeper, getting into those corners and pulling that puck out of the corner is a job not too many hockey players like. But for us here at Delta, it's a job we love. We are complete grinders. We want to get into the corner and bring those opportunities to the people that are interested and listening. And of course, we do things differently. Where you might go to another firm and look at gold and silver, we want to be the cheapest. If we can be cheaper, we will. How do we do that? Well, one, we have established relationships that I've carried forward. There's no doubt that people listening to this show will be both on the side of the industry and listeners that have never bought or maybe just own a little bit of gold and silver. What most people don't realize is Delta's afforded the luxury of having a direct relationship with the Royal Canadian Mint. Don't ask me how. I'm not telling you. But ultimately we do, and that can afford us the best of the best in terms of pricing for bars and coins. And we love Royal Canadian Mint product. But we also bundle prices. So when a client comes along, they want to buy a big chunk of gold, it's not enough to say we have a fixed price for that, Mr. Smith. What we do is go a step further. We say, listen, typically this is what it would cost right now, but hold on, hold tight, get your account open, get your funds ready. Let's go to the supplier and see if we can dig out a better price. And we'll do that on a case per case basis. And we'll also piggyback other orders together. Does it mean that you might have to wait a day to buy? Yes, but don't be in a rush. Do your due diligence and do the right thing. So we bundle orders together. And quite frequently, John, part of the Delta difference has come to be that we ultimately want to be available when it's convenient for the client. We don't think in 9 to 5. We don't talk in 9 to 5. And yes, we post hours like every other business does. But if we can accommodate a call at 10 o'clock at night, because that's when you have the time to talk about your money and your wealth, we will do it. And we never have a problem with that. If we're available, we're happy to accommodate our client base. So it's a little bit about the Delta difference. It's a treatment that goes above and beyond. And as far as we're concerned, it involves quality products, service guarantee, and lowest price. So that's part of the Delta difference that we talk about. And we make that all in one neat little package, because at Delta, what we say is there is a U in the term harbor, and that's because it's all about you, the investor. So that is the Delta difference. And we're grateful for our client base for participating and being with us. And that's what we like to get across.
It's a good way to wrap it up, pal. We will do exactly that for the week. Now, reaching out, as Darren just mentioned, deltaharbor.com, harbor with a U, to start investing, get more information, get a hold of that newsletter as well, deltaharbor.com. And the phone number anytime, 1-888-335-8645. We will catch you again on Hard Money.